Good morning, traders. Paul here with GammaEdge. Today is Monday, the 15th of May, my son's birthday. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Overall, we're more in a bearish tone than we've been. On our short-term and long-term models, we are seeing more and more of a downtrend. The 0DTE and swing models, which look at the instantaneous CT, as well as something we call the railroad track pattern. You'll see that on the next screen. Both are in a continuation day down. This means that you should be looking to decrease some of your long deltas and potentially open up new short deltas as the trend continues. Market model, long-term downtrend is in place. We're seeing more erosion of the long-term models. Highlighted just the ARCX. It's been green for some time. We've moved it now to an orange state. It was confirmed up on 428. It is now below the ribbon, and the ribbon is transitioning to bearish. Again, you will see that here on the next slide. Market breadth is viewed by our 52-week new high, new low indicator. At the 52-week new lows still outpacing the new highs. This is a lagging indicator, but it's an important one because we are not seeing any broad participation. 395 to the downside, 139 to the upside on Friday. Transitions, we closed at 41.24. We are changing the transitions just a little bit. They're moving around a little bit, which is short-term positioning ahead of OPEX. We are looking at the primary transitions for the SPX PM settled and the 0DTE at 41.15 and 41.20. When these two are aligned, there is no anticipation of a major shift today or tomorrow in the overall model. The combo complex has dropped 40.95 to 41.10 now. Now, when we see a dropping of the transition, we pay a little bit of attention. We dig into the numbers a little bit, and actually what we're seeing are short-dated at-the-money calls going in and short-dated at-the-money puts being removed, all for the week. This is short-term bullish with a preponderance, say, Tuesday and Wednesday, again, coinciding with some of the VIX roll-off, looking at a change there. So just be aware of this. We might see a pop, but we still think the overall market models, and whether they're short-term or long-term, are still pointing down. We are seeing continued weakness in the overhead SPX combo. This is a multi-day trend, and you should not ignore it. Under us, though, is still an in-the-money call-dominant structure. The out-of-the-money puts are not visible, but we are certainly weaker. So the entire bull thesis right now is continuing to erode into OPEX, but just be aware of that. For the 0DTE folks, we have a lot of them in the Discord. 41.15 is N-trans and 41.20 is P-trans. So that's really your line in the sand for today. If we drop below 41.15, I would look for, obviously, 4100 to be tested again, just like it was on Friday. The upper charm dominance is 41.40. It extends up through 41.50. If we move upward, a lot of what was out of the money calls will become in the money, and that'll be significant. That will be supportive charm flows all the way up to about 41.50, but above that, we do expect some stalling because there really isn't much up there to contribute for today. 4100 extends down to 4080 on the lower charm dominance, and why we think this is important is that if we lose this this level of 4100, there's a lot of folks who think we'll just sweep around at 4095 in reverse. Sure, it's possible. Who knows? But by our eye, if we take a look closely, you'll see at 4080, below 4080, we start accelerating down towards the 4050 strike. Discord users, we want you to run the value SPX P05, which will give you the expiries for the week, and just check out when folks are targeting different days and what expiries and what magnitudes. As I said, we've got a kind of a shift in sentiment now in the composite cumulative tick model. We've got three time frames indicated here. We've got the white bolded line here, which is the instantaneous cumulative tick, and you can see that it is down, down, down. We don't know if it's going to go up or down. It's not predictive, but it does have some momentum. The railroad track pattern converted down here. It continued down on Thursday. Friday was a very serious down day, and you can see that this actually can last really up to about 11 days. So it just depends on the severity of the reversal. Again, not indicative of the future, but it does have some momentum. And then here we have the long-term, what we call the ribbon. You can see once the short-term instantaneous cumulative tick moves below each of the moving averages, it turns the slopes negative, and that is the initial indication that you should be, if you have a longer-term swing or position type of mentality, you should be looking to increase your downside exposure. Not necessarily, if you've got good gains, not necessarily take everything on the long side off the table. It's doesn't have to necessarily be a binary signal, but it does suggest, and the back testing does suggest, that you should be increasing your your short exposure as we drop below the ribbon. Taking a look at the ES, you can see the different levels here, unchanged up through here. I've put some notes in here. Just realize that we actually are showing a little bit of bullishness in the ES right now as they position, so just be aware of all of that. I'll let you pause and read these as we go forward. The PM settle complex, when we take a look at the gamma structure, still the overhead in the PM complex, and note that we had some questions over the weekend on this. When you have a little caret in front of this, because we run this before the open, we have to use an alternate symbol, and as a result of that, it's just the way things work. It does denote the PM settle complex, so just be aware of that. So when you see this little caret in front, this is PM and not the combo complex. Why this is important is this is the shorter dated, what we consider more heavily traded than the AM complex. As a result of that, we pay attention to this. And what we're seeing overhead is that we still have an out-of-the-money call-dominated overhead structure, but it is still very much weaker. Key here is that we are now seeing a growth of the out-of-the-money put speculators to the downside. This is positioning ahead of a move lower. And you can see they really started concentrating quite a bit here if you go back and take a look at Friday's video. So what that basically is saying is that we're seeing some erosion, but not terrible here. To the downside, we're definitely seeing some short-term opportunistic plays to the downside. 0 DTE, more or less balanced. That's important. We think the range for today is somewhere between these two. The upside probably limited 4150, 4155, and that's just there's not a lot of contribution. Again, as I said in the notes there, make sure you watch value SPXP with a 0.0 if you want to watch just the today, or 0.5 to watch the week. To the downside, we see a lot of contribution all the way on down to 4050, so just be aware of that. The 1 DTE, folks, this is positioning ahead of Tuesday, relatively weak, so don't torture the data to tell you the story you want to hear. That stated, the 4115 is consistent across the SPX PM, the 0 DTE, and the 1 DTE. When we see something like that, this really is the line in the sand. Just be aware of that on the short term. We are watchful of this parking zone here at 4135, as well as potentially somewhere in the 4115, 4120 area. So we would not be at all surprised if Monday's action ended up somewhere in these particular zones as we go into the close. Taking a look at the crystal ball for the week, this is where we just look at just the expiries of the SPX for the week. You can see contributions above 4,200 virtually non-existent. You can see there's a lot growing here down 4,000. A well-hedged market doesn't collapse, but it could be like a feather and just go back and forth as it fades downward. A couple things to be aware of. We are losing quite a bit of the overhead call speculators this week. I know we said here in the PM complex that they're still present. These are further out than this week. All right, so there are still clearly out of the money call speculators who are in the complex, but for the week, they're not here right now. So just be aware of that. To the downside, we are starting to see the increase in the out of the money put speculators relative to Friday, and because of this, we have two bearish trends that are kind of pointing to an overhead cloud or storm clouds on the horizon for the week. Taking a look at the combo complex, which is the AM and the PM settle complexes all wrapped together. Note there's no caret before the little SPX up here, telling you that it is the full complex that is being considered. Below us, out of the money put speculators are not visible. This is a big deal. This means, all intents and purposes, that the call speculators are still in control. Now, this is important because in the bigger complex, we'll see charm flows that are going to still be very constructive to the upside, and all of the puts that are down here that are not visible, but there's clearly put open interest here, they will have positive charm flows also. Just be aware of that. Now, as we go into looking at the overhead here, the call speculators are starting to give up, right? We are continuing to see they're running for the exits. Every red line that you see here, they have lost the battle at those strikes. And as we see more and more red come into the SPX Combo Complex, which is a huge complex here, folks. This is an extremely large complex, most liquid complex that's traded in the market. This is definitely a tell that there are storm clouds on the horizon. Key levels are indicated here on the left-hand side. Just be aware of those. And then finally, taking a look at the combo structure, 40.95 is really that low level. Below that, we have a character change. 41.15 is really the line in the sand. If we get trapped in the transitions area here, you can imagine where it's no pressure, there's not a lot going on, it could be just chop, chop, chop. So look for 41.15 to the upside to continue to have any chance of an expansion upward. 40.95 for certainly a retest to 4,000. Now, a couple things are important here. Minus X has moved up from 3,900 to 4,000. This is important. You can see the relative magnitude. The market is positioning. This is normally we have this kind of linear type of behavior in how speculators are looking on the put side. You can see this is quite abnormal for the 4,000 strike. So everyone's gunning for the 4,000 strike to the downside right now. Just be aware of that. To the upside, though, things are not necessarily dominated by the bears here. 4,200 is still very strong. 4,300 is strong. So the call speculators are still here. They haven't given up the complete ghost, but you can see that 4150 has dropped, 4100's dropped, and 4025 has dropped, and that's why this 4115 is going to be very, very important. So this little spike right here is 4100. You can see it's right in the middle of transition, so we could test it, easily move below it. It's not very strong. There's not a lot here. The more dominant levels are going to be 40.95, and want everyone to pay attention to that. So that's it for today. If you have any questions, comments, come on in to GammaEdge.us. If you go to that URL, click on the upper right-hand corner where it says pricing, fill out the blanks, come on in. 14-day free trial, all the tools turned on. Happy to have you, and would be happy to discuss what you're seeing here and how we're positioning for the week. Follow us on Twitter, please, at GammaEdges with an S, and then here on YouTube, two things. First thing, if you like today's commentary, thumbs up. Gives me immediate feedback that I'm presenting content that you want to see. And then, of course, subscribe, because Taylor, myself, and Mike will post videos, and we want you to see what we're seeing. So with that, I will bid you farewell. Make it a great week. Hope to see everybody in the Discord, and take care.